Alright, hello, I am Matt, of course, and this is Stock Speedrun number 4 for the weekend of February 12th, 2022, because I've been slacking on these speedruns for a few weekends now, and I didn't want to just do the 3 requests and call it a night, so we're on to number 4. If you're unfamiliar with what a stock speedrun is, if this is your first time seeing a stock speedrun, you can check this video's description for an explanation and, of course, a disclaimer as to its content, so you don't do anything stupid based on my advice, alright? Speaking of my advice, let's see what I got to dish out right here. Saul Centers. Sounds like someone's name. I assume it's a center owned by some guy named Saul. Am I correct? Self-managed, self-administered, equity, R-E-I-T, right. Real estate investment trust, headquartered in, Bethesda, Maryland. I know where that is. Which currently operates and manages a real estate portfolio of 60 properties, which includes 50 community, neighboring shopping centers, 7 mixed-use properties, approximately 9.8 million square feet. Where are those about? 80% of the Saul Center's property is in metropolitan DC and the Baltimore area. I lived there for a time. It's very possible that I was even in a place that they owned, and I just did not know it. So, very interesting. I'll tell you what's interesting in the sense that it's not terribly impressive. I know it's a weird use of the word interesting, but it's these earnings. Because they seem to have been stagnant for the last 3-4 years, and even took a hit in 2020 because, well, we all know what happened that year. Well, actually, no, it didn't. Again, the size ratio on these bars is messing me up because it looks like you can barely see slim blue earnings bar in this 2020 here. That would make you think it's, minuscule compared to prior years, but no, it's just the scaling is messed up because it says $40 million in earnings here. This is 48. Does that make any sense? Do the size of these two bars make any sense? No. 48, 50, 51, 40. Those are basically all the same number, right? Seemingly 226, 227, 231, and 225. Kind of just all the same number. So, yeah, this is definitely not a growth company. This is, if you're looking for growth, this is not where to go because it seems like these earnings and these revenues are somewhat stagnant. But still, usually, real estate investment trusts, you don't necessarily buy them because you think there's a whole lot of growth involved. You think, but you buy them because, for example, they usually have fairly good dividend payouts. This is pretty good, $228 for a price of $47. That's not too bad. And they can sometimes have interesting news associated with them. None of which I'm necessarily seeing right here for Saul Centers. I kind of want to know this. Where will Saul Centers be in 10 years? Before I read that, I should look at the chart. It's usually the first thing I look at, but I kind of passed it over this time because I wanted to know what the hell Saul Centers was. It's actually owned by a guy named Saul. And this chart... Hold on, let me go even further out. Since at least 2006, this chart makes sense because, like I said, earnings ain't going nowhere. So what should theoretically, again, in theory, happen to the price? Price should also go nowhere. That's kind of what it's done. Yeah, sure, it's kangarooed a bit up and down with general market trends. Here you got little 2008 crash here. You got, some turbulence in 2011. You got the rising stock market of 2017 and 2018. But by and large, it's been pretty much stagnant. Hanging around in a range of roughly, let's say 45 to 55. Okay, it spiked to 60 a little bit here, but you kind of get what I'm saying. It's and reinforced by the fact that after COVID was done, quote unquote done. I don't know when it's gonna be done, but quote unquote done. As far as the stock market's concerned, it has understandably, reasonably, predictably returned to that level and is now sitting pretty steady there. And I see literally no reason why it should move from that level in the near future. I think I kind of said what I want to say. Do I just want to end this here now? No. You know what? Let's go ahead. No. Because I opened this article that I want to read. I mean, I think I've kind of already stated my business on this stock. Where would that take me with it though? Probably a hold. Because I feel like if you own it already, if anybody owns it already, they're probably sitting on it to collect the dividends. So, I mean, if you're doing that, keep on doing that. That's fine. If that works for you, that's great. If you're looking for something that you'll get some sweet returns on in the future, probably not something for you. And again, I wouldn't give it a sell either because well, you know what? Okay, I think you can understand why I'm sitting on a hold right now. Let's see if any of these articles or any of these news can sway me from that. Okay. To be generous, 4.7% yield, right below double the coronavirus pandemic. Owns shopping centers, mixed-use properties, blah blah blah. Pipeline. These 4 land parcels owned by Saul Centers. 3 are located near metro stops and are likely to become mixed-use properties. Twinbrook Quarter, Hampton House. Sounds familiar, but I don't think I've been to any of those places. Waycroft. I don't know what that is. Future is late. So where will something be in 10 years? Finally, the answer to the friggin' title of the article. Simple answer is bigger. While the more nuanced answer is more diversified by property type. I mean, I can only hope so. But the thing is, why would that be in the roadmap for the next 10 years? Because, if I go back and look at this chart, it seems like it was not in the roadmap for the last 10 years. Otherwise you would think this chart would go somewhere, which it hasn't. So I kind of wonder where this idea that it will be bigger and more diversified in the next 10 years comes from. Is it just hope? Maybe. Then again, hope's not a strategy. You think carefully about that before hitting the buy button. Dividend yield here is generous. Yes, it is. May not offer enough companies to take on the inherent construction and concentration. I can read, damn it. Concentration risks. Okay, that kind of didn't answer any questions at all. A year ago, investing. What? It would have delivered you a 98% gain? Oh, well that's... Dude, that was COVID, though. Well, actually, no, it wasn't. Wait, how old was that article? Saul Centers a year ago. That was from 3 months ago. October 30th, so we're talking about October 30th of 2020. Which is right here. Literally the lows! God damn it, I hate Simply Wall Street so much. It's so stupid! What? How can you take the idea that, oh yeah, if you... The revolutionary idea that if you bought a stock at the absolute lows of the last 5 years, you would have a fantastic return? Oh, really? You think so? It's just such a revolutionary idea. If only I knew in the future what the buys and lows would be. Okay, I'm losing my cool a little bit. I gotta recenter myself. Simply Wall Street is making me lose my mind because these guys have the shittiest takes. They're not wrong takes. They're just brain dead takes. Okay. I gotta calm down. Whew. Breathe. Breathe. Okay, I think that's enough of looking at articles for today. See if any of the geniuses in the Yahoo chat room has anything to say about this. Aside from the Yahoo Finance Insights bot, aside from someone who is talking in the Apple conversation, which got brought in here for some reason. Oh, because they mentioned, what the hell? Well, what does BFS mean in this context? Always does when I sell. Hashtag BFX. I don't know what that means. whatever. Quarterly dividend, I could have read that elsewhere. Finally have a nice update today. Seen Larry's a lot. What? Oh, wow. You guys crack me up sometimes. Okay. Nothing doing in here. Nobody's chatting about this, which kind of makes sense because it's not, you know, it's not a super hype, super hyped kind of stock. Probably flies under the radar for a lot of people, for like the whole market in general. I don't know. I can't really think of what else to say about this. Let's see. A lot of insiders, a lot of institutions. That's actually pretty promising. If insiders feel good enough about the stock to sit on it. Probably not hoping for it to go up, but at least to collect those sweet, sweet dividends. Apparently they're confident enough that it's not going to go down. You know, kind of like I was saying before, it seems to be pretty steady. Yeah, okay. You know what I want to look up? I want to look up exactly what properties they have. What's this called again? Saul Centers. Saul Centers properties. Let's see, what do they own? I'm curious. The State Investment Trust out of Bethesda, Maryland. Wow, you can literally just they have a literal property search? Well, that's crazy. Let's see, what do they own in Maryland? Any Marketplace is Silver Spring. Flagship Center. Sounds familiar. Have I been there? Would I have been there before? Not sure. South Rockville. And a lot of stuff in Virginia. Not as familiar with the Virginia area, I'll admit. Oh, there's the Waycroft they were talking about. What is the Waycroft, by the way? Sounds very fancy. Wow, that's a fancy schmancy hotel. Holy crap. Largest, or newly constructed, mixed. Actually, that's interesting. They construct and manage the buildings also. At least that's what it seems like. Fremont has become one of the most successful commercial residents in the country. Common Mall, 3 bucks in the Boston Metro Station. So they're not just renting out. Well, they probably do. They probably rent out some of the excuse me, some of the properties too. But it seems like they also develop them themselves and manage them themselves too. At least that's what I'm getting here. Maybe I'm not reading it properly. Applications have been received for residential. Oh, wait a minute! This isn't a hotel. This is residential leases. This is an apartment building. Okay, that aligns a little bit more with what real estate investment trusts usually do. Located at the corner of 2 major thoroughfares. Why did I think this was a hotel? Maybe just because it looks so very fancy. Amenities include an interior courtyard, business center, resident lounge, library, fitness center. Yeah, resident lounge. $478. Approximately 99% of the available units. I wonder what the rent is on this place. Looks pretty schmancy. I'm kind of curious. Probably through the roof. Oh, get out of here. Let's see what the floor plans look like. Actually, you know what? I would have expected these rents to be higher. Actually, is not bad. Well, I mean, it's still very high end, but I was expecting something even worse. Then again, $3,000 for a one-bedroom is kind of insane. But that's probably one of the larger first one-bedroom floor plans. What the hell? These rooms are named based on what you do with it, based on what you do in them. Yes, you live in the living room. You sleep in the bedroom. It's so weird. Yeah, but this one also has a den. It probably explains the higher rent. There's barely an actual kitchen. It's like all in one. Yeah, that's a crap ton of rent for an apartment like this, to be honest. But then again, you're paying for the luxury of the building and the location and the surrounding area and probably the closeness to the metro. Also, they kept bragging about they're close to certain metro stops, none of which I've ever used. But I've heard of them. I've seen them on the map. Anyway. I think my original assessment on hold is fine. If you have it, you probably have it for collecting these dividends anyway. If you are someone who likes to sit on dividend stocks, then yeah, go ahead and pretend that I hit this buy button here. But it's probably not the majority of people. And I feel like anybody who is very much into dividend stocks or real estate investment trusts like this probably already has this on their radar. May even own it. And if they have it, there's no reason to sell it either, because even though it's not going to go up, I don't think it's going to go down either. It seems to hold pretty steady, and it's got a pretty nice dividend you can just sit on and, you know, keep collecting. So that is my justification for a hold for BFS Saul. You know, that's kind of curious. I wonder why it's called BFS. I wonder why the ticker is BFS. How do you get that from Saul Centers? That's strange. Maybe it was named something before, and then they changed the name to Saul Centers, and the prior name is where BFS came from. I don't know. You can't explain that. All right. Whatever. That's it. That's it for this. If you feel like letting me know what you think, please chime up in the comments, and I will catch you in the next one, dear viewer.